Welcome everyone to our second official fireside chat with cyber insurance industry leaders, where we explore the hottest topics in cyber insurance, interview experts, and help you become a better cyber insurance professional. Today we have Kelly Geary speaking. She is the National Practice Leader of Executive Risk and Cyber Claims at Epic Brokers, and she has a very long career in cyber insurance, specifically in several highly senior roles related to cyber claims and coverages at several giant insurers. So Kelly is an expert on cyber insurance education. Kelly, why don't you tell us about that a little bit more?
Sure. Thank you for having me. I have been involved in, as you indicated, the cyber insurance really since its inception in the market back in the early 2000s, when it was just sort of coming about. And I was on the carrier side at that point in my career, and we were developing products specifically to try to address this risk that was emerging. And endorsements to different policies that existed that were getting sort of, exposed to cyber risk when we really weren't underwriting to it. And so that's where I started to really get involved in looking at technology risk and how that impacts traditional insurance products. And I spent probably about 15 years on the carrier side, and I would say from a cyber perspective, maybe 10 or 12 of those years on the cyber side, developing product language and training claims professionals on how to deal with cyber claims that come in, because they're a little bit different, I think, than most claims professionals really understand. And back in the early 2000s, there weren't any cyber claims professionals. So it was sort of teaching something to industry claims professionals that they really had no basis of knowledge for. And as I progressed through my career, I'm now on the broker side, but I have always been involved in trying to train claims professionals and trying to wrap their heads around this risk, how to apply cyber insurance coverage wording in a fair and equitable way, and also how to address claims on traditional policies that might get kind of where cyber risk touches it in some way.
So the aim of today is to discuss coverages overlap specifically related to cyber. I think it would be really helpful if we just get an overall idea about what coverage overlap actually means in the context of cyber. What do we mean when we use that term, and also what the term silent cyber means?
It's such a great question, because I think initially people started using the term silent cyber, and that goes to one of the things I alluded to just before is that technology evolved at a very, very rapid rate. It still does. And the insurance industry doesn't really evolve that quickly, historically anyway. And so we have this, portfolio of very traditional insurance products that were created by the insurance market specific to risks in different areas. You have employment practice liability policies for employment-related risks. You have property policies for property-related risks. And professional liability policies for lawyers or accountants. And they have always been very tailored to that particular risk. And the insurance industry really likes to keep those risks within that lane. They teach their underwriters how to evaluate those risks based on actuarial data from years and years and years, loss ratios and things of that sort. And they teach their claims professionals how to respond to those, and everybody becomes very good at that. And what technology has done is really blurred the lines of all of the traditional insurance products, because we're all relying more and more on technology. And so what was happening is you started to have these claims pop up, and because there was no specific affirmative coverage or exclusion in, say, for example, a property policy, you saw it really most apparent at first in property policies and maybe commercial crime policies, where these risks would pop up and companies would be looking to transfer that risk and looking to their insurance portfolio and saying, where am I going to put this? How am I going to get coverage for this? And they would look at these traditional products, and there was no cyber exclusion at the time. And so these policies, because there was no affirmative coverage grant and there was no exclusion, were wound up having to pick it up. You couldn't exclude it. There was no way to get around it. So these carriers, these property carriers and commercial crime policy carriers, were paying claims that they didn't intend to pay. They did not underwrite to technology as a risk that could potentially trigger coverage. And that was where silent cyber really started to come up. And so silent cyber was something people were talking about a lot, maybe 3 to 5 years ago. And then the market took action, right? The market was like, look, we've got to do something. We've got to either exclude this affirmatively, or we've got to provide coverage in some way to protect the integrity of the particular product. So what you've seen, I would say, in the last 3 years or so is a real movement within the industry as a whole, all product lines, to affirmatively address cyber risk. Lloyd's came out sort of as a leader in trying to do that, and then many other markets followed. And so you have a lot of traditional policies now, property policies, crime policies, that affirmatively grant the coverage. So they're not necessarily, some are trying to exclude it and some are trying to actually grant the coverage. And any good claims professional would tell you that it is much easier to contain the exposure in a policy if you have a grant of coverage. And you could say, look, I have notification expense coverage in my property policy with a sublimit of $25,000. Very easy to say that's the whole exposure, that's it, rather than try to exclude coverage based on an endorsement or an exclusion, right? So excluding coverage based solely on an exclusion is very hard to do if that's all you've got from a claims professional standpoint. So when I talk about overlap, which I think is a little bit different than silent cyber, because silent cyber was just the insurance industry, trying to wake up to the fact that, oh my gosh, technology is hitting all technology related risks are triggering all these policies because we're not addressing it. That's silent cyber. Overlap is now what I think the industry needs to grapple with and needs to pay attention to, because there is a lot of coverage in different policies for cyber or technology related risks.
You were talking about, silent cyber was more of an issue maybe 3 or 5 years ago. And you were talking about, specifically actually property insurance, underwriters, carriers, kind of sticking to their lane and not seeing a bigger picture of the risks and the risk landscape. And I wanted to say, obviously we work very closely with professionals from all parts of the cyber policy chain, but we have seen many cyber underwriters who are trained in cyber but not in property, and many property underwriters who are highly trained in property but not in cyber. And I still think that there is a knowledge gap. I'm wondering what you think about that, and also how you think that we can resolve that gap effectively.
Yeah, no, there definitively is. Look, I think some of it you could point to and you could say is generational, right? I think that older professionals tend to not be as tech savvy, so don't understand technology, and technology can scare people. It can be overwhelming if you're not immersed in it, right? And I think that a property underwriter, if they're not seeing or being trained in cyber risk and technology-based risks and seeing it every day, they're not going to be as adept at dealing with it as a cyber underwriter or a technology E&O underwriter or something along those lines, who's actually looking at it every day. And I think that, the challenge here, I think for all of us, is that there's no suggestion that technology is going to be relied upon less as we move forward, right? It's just relied upon more and more and more, right? And it evolves so rapidly. That's the other challenge of training people, right? And really getting people, fixing that knowledge gap, because it moves so fast, and that's, so I think it's a little bit scary to some people. I think that it can be somewhat generational. I think the younger professionals are a little bit more tech savvy just because they're more comfortable with technology. I didn't grow up with an iPhone, right? My daughter did. So she's much more she's our tech support in our house. But so I think there's some of that, right? And as we evolve as an industry, that I hope that will just change a little just from that perspective. But the technologies just evolve so quickly.
Yeah, I feel like that almost opens a whole other conversation that I don't think we have time for today, but about the issue of talent in the insurance industry. And you're right that, with a younger generation, maybe this kind of knowledge and understanding, and also this appeal of technology will actually help the industry progress. But at the moment, we're seeing a major talent shortage. Many younger people, younger workers, not so interested in the insurance industry.
Yes.
So that is a whole other kettle of fish. But I agree, cyber really is just the start of a much bigger revolution, and the tip of an iceberg of so many more products that we're going to see coming out in the industry, based on technology, with technology at their core. And it is all about getting a technological foundation in order to handle that risk.
Yes, I agree completely.
Yeah. So what we'll do next is we'll take a high level overview of some policy wording. So I'm going to share my screen.
Sure. So this is a sample exclusion that was introduced specifically to professional liability policies, a lawyer's professional liability and an accountant's professional liability. So an E&O, an errors and omissions policy. And really, if you think about either of those professionals, but specifically the lawyers, the potential for overlapping coverage between a lawyer's professional liability policy and a cyber policy is significant, because at the very core of what a lawyer does or is supposed to do, right, is to really keep information that a client gives to that lawyer confidential, to protect it from any kind of disclosure, whether that's by negligence, by someone stealing it, or in any other way. You're supposed to keep that information confidential. And what a cyber policy is doing is obviously trying to help organizations or firms transfer risk arising from a loss of that confidential information. So what we started to see, as I mentioned before, when the insurance industry really started to act on trying to address silent cyber, one of the ways of doing that is to provide an exclusion or add an exclusion. So it's very clear what this particular policy is supposed to respond to. And this is an exclusion that was presented, and you have some highlighting here. This is all mine, the highlighting and the bolding and all of that, and the red. So this is basically saying this policy excludes any actual or alleged loss, damage, liability, claim, fine, pretty much anything, right? Directly or indirectly caused by, contributed to by, resulting from, arising out of, in connection with a cyber incident, a cyber act, or a data breach. So this is just, the underwriters in the E&O space saying, look, just so we're clear, none of this is covered, right? We don't intend to, we're not underwriting to that. We don't intend to cover that. What I've highlighted here is really just to sort of stress, what this is doing in its core form by itself, unamended, is almost, cutting away at and destroying coverage that used to sit within an E&O policy that every law firm and accounting firm relied upon, its core coverage, right? And so if you come to the E&O policy and say, we're going to strip all this away, and that firm doesn't have a cyber policy, then you have a potential problem, right? Or and this is very, very common, cyber policies oftentimes have professional liability exclusions. So they will have a very specific exclusion in the cyber policy saying no coverage if the incident arises from a cyber event. So you have a real problem here, right? You've got these two, competing insurance products, and you have this firm in the middle that's sort of saying, well, where's the coverage then, right? If you're going to pull everything away that I do in the provision of my professional service, and so much of what any lawyer does on a daily basis, they would argue is within the provision of their professional services. So then it's excluded from the cyber policy. And then you have this cyber exclusion sitting on their LPL policy that is pretty broad, right? It's saying we're going to exclude any cyber incident, and I put negligence there because that's how it's defined. Any kind of negligent cyber related incident, we're not going to cover anything. Any malicious act, so if you had a ransomware attack, if you had malicious software being down, phishing attack, something like that, that would be excluded. And then of course the data breach notification, that's the first party costs. E&O policies don't cover that anyway, so not really worried about that piece. It's the other two that we worry about.
Right.
And this is just, more of the exclusion. And it's the second section of the exclusion. And again, it's trying to provide an exception. It's trying to say, look, we're going to exclude everything, and then we're going to give you something back, because we recognize that there's this potential void of coverage if we do this, right? And so this is the underwriter's attempt to carve something back and give something back. And it's saying, look, it's not going to apply to a claim arising out of an error or omission in the rendering or failure to render professional services. But it's got all sorts of little, kind of nuances to it, right? Involving access to, and think about a lawyer, right? Access to processing of, use of, or operation of a computer system or electronic data. And I struck out this part: owned by or under the operational control of the insured, or a party acting on behalf of the insured. Provided that coverage for such claims shall at all times be access to any valid or collectible insurance. So basically they're saying, just remember, I'm going to give you some of this coverage back, but our policy is going to be excess of your cyber policy. Hopefully it's covered. And then they're very specific. There's no coverage where a claim results out of the failure of interruption of service provided to the insured, internet service provider, telecommunications, cloud. So they're not going to cover that. And that's understandable. And then if we go to the next slide, I think it kind of highlights these definitions, right? So the exclusion goes on, and it very specifically defines these different things, right? In computer system, if you look at this, the broadness of the definition of computer system. So even though they're trying to carve back coverage and they're trying to give the insured something back, all of these definitions are very, very broad. And that therefore sort of dilute the power of that exception to the exclusion. And, I'm not going to go through all of these in great detail, but I think the takeaway here is, the attempt by the market to try to address via exclusion is difficult, especially when you're talking about a professional like a lawyer or an accountant or an architect or an engineer, because so much of what they do on a daily basis is in the provision of their professional service. And the wording that has come out of the gate on some of these exclusions is so broad, it threatens to dilute what they have been purchasing in the past. And then you have on the cyber side, you have the exclusion for professional liability. You can get some markets to remove that exclusion, but you have to be very thoughtful about that. And the broker really needs to be paying attention to the fact that that exclusion should not be sitting in there.
Look at a real life example and connect all of this to something that happened in the industry quite recently, the Merck case. Kelly, could you tell us what exactly happened and what were the lessons to be learned for the industry?
Sure. So the Merck, obviously Merck, and this goes back to the NotPetya attack, which I'm going to try to remember. I want to say 2017.
I was going to say 2017.
Yeah, 2017. Yeah, this is how long it takes things to move through the court system, right? So Merck was impacted pretty significantly by the NotPetya attack, as were many other large organizations. And back then, in 2017, although cyber insurance was, alive and well and running around, not everybody was buying it. It looked a little different in 2017 than it does today. And they sustained a huge business interruption loss. That was one of the main impacts of NotPetya, right? Was this business interruption loss. And they, when looking at their property policy and property policies, up until maybe 3 to 5 years ago, had pretty broad business interruption, coverage. And if you're a large organization like Merck, you have a huge tower of property insurance and you have a lot of business interruption coverage. And because cyber risk was not affirmatively addressed in those policies at this time, it was open. And they submitted a claim. And they try, and what and if I can't remember I want to say it was Zurich, was the carrier, denied the claim based on the war exclusion because of the conflict between Ukraine and Russia at the time. And so they used the war exclusion, which has been around since the 1950s and has not changed at all. And they tried to assert that as the basis for their decision. And, Merck rejected that and fought that in court. All things, it went through a number of different, decisions and appeals and all of that. But more recently, what happened was they won on appeal. And the court basically said, look, if you insurance companies wanted to really exclude cyber related warfare, whatever that might be termed, you could have done it and you didn't. And it wasn't specific in here. And this is, different type of warfare than was intended by that, that war exclusion that the carriers added after the various conflicts, World War II and Vietnam and all different types of wars that were happening back in the 1950s were where that came from. And it wasn't intended to apply to cyber warfare. Nobody could argue that. I think you could argue it, but it wasn't flying. And so, as a result, we've seen the insurance industry try to be more specific about that and really address the war exclusion, change the way it's drafted, change the exception. And the one thing that I think, is very clearly in cyber policies and never has been in property policies or other policies is the exception to the war exclusion. So property policy has a war exclusion and that's it. It doesn't cover war. Cyber policies have the war exclusion, and then they have an exception for cyber terrorism. And so what we started to see as a result of the Merck decision is carriers on the cyber side, as well as on the more traditional products, re-looking at what we mean by war